if you want to profit of a weak dollar just right now, indeed, you should have a look to commodities or material exposed.
So Francois, starting off, growth in the US has been described as weak in the first quarter. Now, another Federal Reserve interest rate hike is expected for mid-June. So how would you describe growth in the US at present?
Yeah, definitely US growth is much better than the one that we have in Europe. I mean, the growth differential is speaking in favor of the US, even if the rebound of the economy is in the US behind us, where in Europe we are still ahead of the zenith growth, but on a much lower level than previous decades or previous economic cycles. Yeah.
So you mentioned the Eurozone a little bit there, so focusing on that a little bit more, so the volatility of the French elections is now out of the way. So if people are observing the Eurozone further, what should they look at for economic indicators?
Yeah, the key issue is going to be definitely in Europe, the forex movement between sterling, euro, dollar, yen, and all these things. As you mentioned, the interest rates are going to rise in the US, which is definitely not yet the case in Europe. I mean, the tightening has started, but marginally in Europe, where in the US we know where we are going. So these types of uncertainties is bringing certainly a little bit of volatility in the market during the summer period. Moreover, as during the summer period, the biggest part of the financial community is not very active, the illiquidity of the market is going to make the volatility on the forex sides, but also on the capital markets, probably higher during this summer period. And currently, the results of the French presidential election is indeed reducing the risk premium on the equity market, on the bond market in Europe, but it's a political risk premium. You have another risk premium, which is the valuation risk premium, and you have always those political external shocks, which we do not know where they are coming from. That could be in the Middle East, could be in Central Europe, could be wherever in Eastern Asia. I mean, nobody knows about it, but these types of impact could have also a significant impact on the level of the markets if the financial community is more or less passive during the summer period.
Fantastic. And now finally, so BCP's most recent investment policy has described and provided an overview here. So can you talk us through what investors should be looking out for? You've mentioned the summer period, but for the rest of 2017 also.
Yeah, looking to key determinants for markets evolution, we would say we should be very careful because of the forex exchange. And we look currently at a dollar which is more or less on the level where it was 1-2 years ago, which means a weak dollar currently. And we would say, if you want to profit of a weak dollar just right now, indeed, you should have a look to commodities or material exposed companies on the bond market and on the equity market. This is one alternative. You should also take some profits because you need to generate some cash somewhere. And definitely, I would say there are some asset classes which are definitely overpriced. I mean, you can define real estate as an asset class, and there is a sub-asset classes by nation. So you can take, for instance, the Canadian real estate market, which is definitely worldwide probably the most overpriced and leveraged real estate market. These types of market, we would say to investors, if you are exposed, just take profit. Take profit, generate cash, and move to equities like energy-related groups, oil industry. Electricity producer is a little bit different play because here we had a liberalization of the market, so prices are under pressure. But doesn't matter, there are few players in electricity in Japan and in the US which looks attractive in terms of valuation. I would say those are the sectors. in the bond market and in the equity market where we would put our main focus. I would be quite cautious with banks. The financial industry in Europe is still waiting for a reform. This reform has taken place a few years ago in the US. It has not yet taken place in Europe. It takes a longer time. There I would be more cautious. Otherwise, I would also be exposed to consumer discretionary stocks, because like luxury stocks, we were saying the economy is resilient, even rebounding to a certain extent in Europe, is resilient and sustainably resilient in the US. Therefore, consumer discretionary stocks is always a good opportunity in that period.
Great. And finally, so you have mentioned a weaker dollar and you're predicting it to go even weaker. So does that mean also emerging market bonds and emerging market currencies might also be an interesting investment?
This is definitely, it's the cherry picking. The problem with the emerging world and the emerging sovereign bond side is that you are more playing a political issue than a credit issue. Therefore, within the emerging bond universe, we would focus on the corporate emerging bond, and those are very difficult to be exposed for a traditional private investor. They should focus on investing in a diversified fund in order to avoid single credit risk. But definitely it's one of the last fixed income pocket where you have a potential yield profit. And therefore, we would definitely suggest to investors to invest in emerging corporate bonds in dollar or euro, doesn't matter. Preferences is indeed dollar because the market is more liquid. The euro emerging corporate bond market is a very niche market.
Well, Francois, as always, it's a pleasure to have you in the studio. So thank you for coming in today.
Has been a pleasure.
Well, that's all from us here in the Geneva studios, but we want to hear how you found this interview, so please do like and comment on Dukascopy.tv.